know nothing about real estate or anything of that nature.
We came here with a backpack and we didn't have nothing else, no money.
You actually can learn with us. If we make a mistake, we're gonna try to share it with you, to where we all learning together. We're real and hungry, and we want you to be real and hungry as well.
Welcome to the Real and Hungry podcast, where we are going to talk about the world of real estate investing for beginners. The reason why I said beginners is because I'm here with my main man, Miguel.
Yo, what's up?
And we are about a year into it, and we're just loving the journey, and we just want to share with everyone the highs, the lows, the victories, and the challenges. So with further ado, today's episode, we're going to focus on talking about equity. We're going to explain what is equity, what you can do with equity, how you can leverage equity, and how we're using that to try to continue investing in real estate investing. So tell us a little bit, Miguel, about equity. How would you describe equity?
You know, man, this is why I tell everybody you should buy a house. I mean, a house is one of the easiest way to build equity and to build generational wealth, and to make sure that, you're making payments on a house, and every time you make that payment, you're creating equity. So, again, if you have the opportunity, get your stuff ready, get your credit right, and call mortgage lender, just like Brian right here.
Just call me.
Call Brian, and he gets you straight. He tell you what you need to, qualify for a home loan, and then we get you together with a realtor, and you can start building some equity as well.
Yeah, and equity in layman's term is very simple. So you buy a house for $100,000.
Mm-hmm.
You live in the house for, let's just say, a year, and I'm just throwing hypothetical numbers out there. You live in the house for a year. In a year, that house could be worth $104,000. And in that year, you also pay your loan down from $100,000 that you owe a little bit down. So your equity is going to be the gap between what your balance is on your mortgage loan and how much your house is worth right now. So let's just say in a year you pay it down just $1,000, but it increased by $4,000. In that scenario, within 1 year, now you already have $5,000 worth of equity.
Yep. So without doing nothing, right? So by just paying your house every month, you build yourself, in this scenario, $5,000, which is great. I mean, you know, most people don't have $5,000 in their bank account today.
Yeah. And normally, like the national average is when you buy a home, your house appreciates about 4% year over year. What happened during COVID is that homes appreciated in some states 18 to 20% year over year. So in some cases, we have markets where the house is appreciated, more than 30% within the 2-year span. So a lot of people are wondering, like, man, houses are so expensive now. It was an anomaly. It was COVID. But I think one thing that's interesting is when I hear a lot of people talk about, hey, there's going to be a crash. We got to wait for prices to come down. And what I'm thinking is, like, let's just say rates continue to go higher and prices do come down, which I believe that they could go down in some markets. But even if they go down 10%, they would literally have to go down like 50% for it to be under pre-COVID time. It's almost like it's probably never going to happen, right?
Let's put it at this. I mean, most people that bought a house, let's say 2019, 2018, you're probably sitting right now almost $100,000 equity or more, which is crazy. And the only thing you've done is, you probably fix your house a little bit. You kept it up in maintenance, and you've made your monthly payment every month. Just by doing that, you probably have sitting on 100, 150, in some cases more, depending on how, which areas and how much you pay for your house. But in this video, we want to, talk to you guys and show you some of the ways you can use that equity that you're sitting on your house right now to leverage, either to invest or, in some cases to pay down some, bad debt, credit card debt or something of that nature. And Brian is gonna get into a topic of how we can use that equity to invest.
Yeah. So in the term of me as a loan officer, it's very simple. So we're gonna look at how much you owe on a house and how much your house is worth based on today's date, and then that gap, whether it's $50,000, $100,000, that is your equity. What we could do with that equity, it's several things, and I'm going to start with the home equity line of credit, because it's the easiest one to use, because This is a line of credit that a bank is willing to give you, and because you have a house as collateral. And what you could do with how this line of credit works is it works identical like a credit card. So you apply for it, you get approved for it, and of course you have to have a work. They're going to look at your debt to income ratio. They're going to look at your loan to value. But let's just say you get approved for a line of credit. Let's just say your house has $50,000 in equity, and out of that they approve you for a line of credit of $30,000. You don't pay anything on that line of credit, zero, unless you use it. So it's almost what a lot of people are doing now is that they're opening up these line of credits. They have it, they don't use it, but now you have $30,000, and that's an example, ready and available to use at any given time when the time permits.
So you can use it. You can use it like a reserve. So, just like Brian is talking about. Let's say you don't really need. Let's say use simple figures, $100,000 that you have of equity in your house. You don't really need it right now, but it's a good way to start the process of getting it and just leaving it there just in case, like as a reserve. Something happens. You lose your job or whatever, or if a good opportunity comes. Opportunity is just, people say it's luck. It's not really luck. It's an opportunity combined with you being ready to take the opportunity. That's what people call luck. So in this scenario, that's one of the good ways to get a home equity line, right? Is that what people call HELOC, or is it a little different?
Yeah, it's HELOC, but HELOC is short for home equity line of credit.
Okay. And then one question that people might have: what do you go to get this line of credits?
So you can go to an independent mortgage broker like myself. You can go to banks. I mean, just about any institution who is willing to give you a home loan will probably have a HELOC program for you. Now,
I heard some of the big banks are kind of cutting back on that stuff. Is it better to go to like a local bank?
Normally on a HELOC, the local banks will probably give you a better term on them. And I think that they're cutting back because there's just a lot of people getting into them. And of course, rates are getting a little bit higher. So prime rate's a little bit high. So maybe they're just trying to be safe with all these banks crashing. Right. They don't want people to use those HELOCs.
So talk a little bit about that too. So you said on the line of credit, it basically you will only be paying interest payment only, right?
So that's the tricky part, and that's where people can get in trouble. So you have to be a very responsible person and understand how to use the HELOC, what you're going to use it for, and what the purpose is. Because if I have a $30,000 HELOC and I draw $10,000 on it, the minimum payment that is required by the bank, it's only interest only. So let's just assume that I'm paying 9% on it. They're just gonna charge me 9%, and that just goes to straight interest only. If I want to pay down that debt, I will have to pay in addition to the interest in order for me to start bringing that balance down. So
that could be real dangerous.
It could, because if you use it like a credit card and you don't know if you don't have a way to pay down your credit card, what happens? You could have the same balance for years,
right?
And then you still have these outstanding debt.
So now that you mentioned that, we're gonna come back to the interest payment only. How long does this typically line of credits are?
So there's some banks have different programs, but normally they'll give you like a 10-year draw period. So they'll give you 10 years where you can use this home equity line of credit, meaning you use it, you pay it down, you can use it again, you pay it down just like a credit card. And then after the 10 years, it becomes like amortized over 20 years. That's the ones that that I'm using right now that I could do. That's what I do, but there are other terms, but yeah.
All right. So, going back to what you were talking about, the interest payment only. So, for example, just to use simple numbers, if you have $100,000 line of credit and you let's say it's 9%, right? Mm-hmm. So you're only gonna be paying back $750 every month, correct?
Yes, that will be the interest payment on $100,000.
All right. So if you pull the whole $100,000, you're only gonna be paying $750 every month. Mm-hmm. That's good. So, one of the things that for example, I told my dad that he got a line of credit on his house as well. I said, Dad, look, you're going to be using this to make a pool in the backyard. You're not going to be using this to buy a nicer truck. You're not going to be using this to pay your debt. You're going to be using these to invest only. So I told my dad, use it only to invest, or, let me use it to invest and I'll pay your return higher than what you pay in the bank, right? Mm-hmm. So, in this scenario, my dad was able to use it to invest. And we'll get to that story a little later. But, that's the one thing I want to tell people. If you get a line of credit, use it for reserve or use it for a short-term investment. Because like Brian said, it's a variable interest rate, so the interest rate could change in the time that you're making payments. So if the rates go crazy high, you're gonna be paying a high payment every month. So I recommend you using it for short-term investment, probably up to 6 months or maybe up to a year, that you're gonna be getting your money back.
And I'm going to give everybody just a quick, because we're talking about real estate investing. Yeah. So I'm going to tie it into that. So let's assume somebody has a line of credit for $200,000.
Okay.
That's cash money. You can pull that money out whenever you want. Let's just say somebody wants to flip a house. They have $200,000 there. They can use their line of credit. They can buy a house. They can use that money, fix it, turn around, flip it, pay down the HELOC, and now they keep their profits.
Awesome. Yeah, that's a great example. And if you're one of the one watching this and you have 150 or up equity on your house, and you wanna do a line of credit to let somebody like us invest it and give you a return. So for example, we'll give you, let's say, 12% return on that money. You're paying 9% to the bank. So in this scenario, you let us use $100,000 to invest in real estate. We have some deals that we've done. We can show you that we, kind of know what we're doing. And we've been good at paying back to some of the investors. So we can use your $100,000. We'll pay you $1,000 every month, and you pay the back $750 at 9%. So you make that difference for yourself. So now you can use that about $220, $250 to invest on whatever you want. You can use it to, pay for your car payment. You can use it for your mortgage. Like I know I'm doing business with an investor right now that he's letting me, he's lending me money from his line of credit, and I'm paying him 12%. And, he's using that money for wherever he wants. But I know this guy's using it to pay down, his mortgage. So he's using that difference on the interest to add to his principal every month. So he's paying down his house to create more equity, to be able to create more passive income. And this is a strictly passive income. You don't have to deal with the property. You don't have to deal with the investment. We do all the work. We do all the dirty work, all the hard work. You don't have to do nothing. You just have to collect a paycheck every month on the first. And isn't that amazing?
And what's different about that invest is normally traditional investment is you're going to put money into your IRA, or you're going to put money into your 401k. But guess what? Your 401k, your IRA, it's a retirement account. It's never giving you anything back per month. Versus when you get into an investment where you have passive income, you're investing your money, but you're getting money back every single month.
That's great, man.
Every single month you're getting a little bit of check, right? And then that's where the cash flow, right? That's where people talk about cash flow is king, which is another reason why people would like to invest in real estate, because you got your money invested, but you're getting money every month.
Yeah, but this is even better, because when you have rental property, you're going to have headaches. I mean, whoever is the landlord doesn't have a headache. I don't know what you're doing. I want to know, right? But most of landlords have headaches from their tenants, So even if you have a project, a property manager, you're still going to have some headache, right? Yeah. In this scenario, you really don't have any headache, because your money is being invested on a property that we're fixing. We're putting money into that property with your money. So that asset is going to be worth more. So you pretty much cover, because if we don't pay you, you can take the house back from us and sell it and pay yourself, right? But you're strictly making passive income because you're not doing absolutely nothing. You usually go into the title company, sign in, give them the check, and then you start collecting money every month on the first. So if you want to learn how to do that, you can leave us a comment. We'll contact you. We're going to drop here an email as well, and we'll help you get the HELOC. We'll help you figure out how much equity you have in your house, and we'll help you make strictly passive income with the equity that you have in your house. So reach us out.
I like it.
We need to buy more deals.
We do need to buy more deals. So what's another way that people can use equity on their home?
Another way could be refinance it, right? Cash out refinance.
You're gonna be a loan officer now.
No, man, you're the guy. Hey, make sure you call Brian.
Yeah. So another thing that people use all the time, and this is a great way that I've been able to help people honestly get out of trouble. So it's not uncommon for you to have a good job, think you're making a lot of money, start spending money, buy a new car, buy a new motorcycle, go on a trip, start racking up all your bills, and then you realize that you're not making that much money and you're underwater with your payments, but you have a house. Well, what I've been able to do, a lot of the time people reach out to me and they say, hey, is there anything that I can do to pull my money out so I can get rid of all these deals? And it's like, the answer is yes. So a lot of the times what we do is we're going to use that equity. We're going to refinance their loan. and we're going to consolidate everything that they owe into just one payment, which is just going to be one mortgage payment. But when we close, we're going to pay all their debt. And 9 times out of 10, the overall picture of their situation is going to be us saving people money, because we're consolidating all their debt into one monthly payment by refinancing the loan if they have enough equity, so we can pull that money out.
And that doesn't mean that they're using all the equity that they have at the house, because
They can't.
right? They can't.
So the bank will only allow anybody to go, like if you have a primary residence where you live in it, the bank will only give you up to 80% of what the house is worth. So you're still going to have an additional 20% of equity always.
So that's good, because that means that you're still not on the water. You were able to get that equity cash out to you, so now you have cash in your hands that hopefully you're gonna be using to pay some of your bad debts, like credit cards or card debt or whatever.
Sometimes we do that for you. So there's 2 ways to do it, right? One, I'll give you the money,
okay,
and you can do whatever you want with the money. I'll let you disperse the money however you want. Mm-hmm. Or 2, you just tell me, hey, Brian, I want you to pay everything off for me, and I'll do all the dirty work. We'll coordinate with the title, with the attorneys, and once we get all the funds, the title company will get all the funds. We give the title company all the funds, and they'll disperse all the money to the institutions that need to be paid.
Let's say some of the people that are watching that they have bad credit, so they're like, man, I don't think I can do this because my credit's not good enough. So in this scenario, by doing that, and the bank knows that you're doing that, you're leaving money on escrow to pay for this bad debt, right? Does that help you get the loan?
Yes. So a lot of the times we almost have to do that in order to be able to meet the debt to income requirement that it's needed for the bank to give you the loan.
Wow. I didn't know that. Yeah, that's great, man.
Yeah. So a lot of the times even if somebody wants to buy a house, right? Like there's been times where people have money in the bank, they want to buy a house, but they have a car payment, and that car payment is taken away from their buying power.
Wow.
But they have enough, let's just say they have a $5,000 balance on the car, but that car payment is $600 a month. Well, if they have enough money, I'm just like, hey, don't worry about it. We're not going to pay it off now, but when we close, we're going to pay off that car. And because we're paying off that car, now I can use that $600 that they were paying a month to be able to approve them for more money.
Wow.
For their house.
That's crazy. So, not only you're paying your back credit, your bad debt, you're also helping your credit score, because your credit score automatically is going to increase. And then you're still going to have equity in your house, which, let's say you still have 20% equity in your house. In 5 years, you're probably going to have more. So guess what? In 5 years, then you can do a HELOC, and then you can use that equity to let somebody like us invest it, or invest yourself in real estate or whatever you want that's going to give you a higher return than what you're paying. So this is why we created this podcast. We want to be able to give you value and be able to be someone, like just like us, where we started from scratch. And if you're listening to us and you're learning something, please subscribe and give us a thumbs up, and that really help us with the algorithm. And we create videos for you, so please help us with that like and that subscribe, and hit that little bell in there, so when we upload the next video, you're ready to learn and learn from our mistakes and learn from some of the things that we're able to learn from during this period. So
yeah, absolutely. So again, the goal is to bring value to you, and equity is the biggest thing. So if you bought a house prior to COVID, you're good. You're sitting on a gold mine. You have a lot of money in your equity for sure. I know that for sure. If you're buying a house today or tomorrow, you have a bright future ahead of you, because all you're going to do is you're going to slowly start building equity. So you know that a year from now, your house is probably going to be worth more than it is today. 2 years, it's going to be the same. And as that time goes and you pay down your mortgage, you're building equity. And that equity is going to give you flexibility. It's going to give you opportunity. It's going to give you freedom. It's going to give you a peace of mind, stability. And I can go on and on and on and on. And
that's good for real right there. So, one thing that I always tell that I've learned, I hear people say all the time in one of these meetings, like we go like KREA, they say never sell your real estate, right? And they kept saying that, never sell real estate, never sell real estate. And I'm like, why are these people telling me this, right? So now that I've learned a little bit of why they say that, I'm going to tell you, do not sell your real estate. Keep your house. And one of the ways, a lot of people sell their house to buy a bigger house. Don't do that. You can rent a house, you can buy your dream house, while you're still using the equity from that house to either purchase the other house, or, to be able to invest it so you can acquire a better real estate, right?
Yes. And let's talk about a mistake. So this is my biggest regret and my biggest mistake. And I talked about it on the last episode, but I just think that I can talk about it in every episode. My first home that I bought, I sold it. Yes, I made a lot of money and I used all that money to buy my new house. But that house right now is worth more than twice as much as what I bought it for.
Wow, that's crazy, man.
I didn't know that I could use the equity that I had in my house and do a HELOC or a cash out refinance.
Man.
So now we're talking about it, but when I sold it, I had no idea that was there, and that's why we're making these videos, because if I would have known that, I would have kept it. I would have done a cash out refi. I would have grabbed that money. I would have bought my new house, and I would have still had that house.
That's gold right there. So imagine, guys. So Brian, he bought the house for how much? You bought the house for again?
125.
So you bought it for 125. How much you sold it for?
I sold it for 206.
So he sold it for 206. So he could have automatically, let's say, what's 80% of 206? Let's do some quick math real quick. All right, I got a calculator right here. So let's do 80% of 206. So you could have.
I owed probably about 110.
110. All right.
Yeah,
So let's
when I
do
sold
this.
it.
So 110. So you realistically you could have cash out 54,800, probably at a better rate than what you had or similar rate, right? So when you sold the house, how much money did you get clear?
About close to 80.
Close to 80. So you really only got about what 26,000 more. So that's not that much difference. So you could have cash out tax free, because this is the other thing. You got 80,000, but you probably, well, I don't know if you had to pay taxes, because
I didn't have to.
Okay, because you hold it for more than
2 years.
Okay,
Yeah.
So he didn't have to pay taxes, but some people have to pay taxes on that money. So you could have cash out 54,000, right? Rent the house. So now guess what? The house, you still have equity on the house. The house is probably worth way more than 205 right now. And then
House
you
is
could
worth
have.
300,000 right now.
That's crazy. So look at that.
300,000 right now.
You would be a millionaire, Brian.
I'm telling you, my biggest regret.
So let's back that out. So you would have kept the house, rented it out, made passive income every month, paid down the mortgage, gained the equity, and then you would have put the money in this house just like you did. And guess what? Now this house, you rehab it with that money. This house gained on value, and what you did now on this house.
I got my HELOC.
There you go.
I got my HELOC.
And what are you doing now?
I'm using my HELOC
To invest where?
to invest in real estate.
There you go. Make more money. Yeah. So that's the beauty. So if you have equity in your house, even if you want to use it for real estate, keep watching the videos. We're going to teach you how to invest that money. Or if you don't want headaches, you just want to sit home and collect a paycheck every month, we can help you get that. Just give us a comment on the bottom. We'll reach out to you, and we'll start working on getting you some passive income, real passive income.
For sure. I like it. What else do you want to add?
Man, I think this has been a great episode.
We're trying to keep it short, sweet, and to the point. We don't want to fluff too much. So I think that was good.
So only thing I want to add, please subscribe. It's really gonna help us, and it really motivates us to create more content. And we're here, real and hungry.
Yeah, love all the comments, all the love, all the support. We appreciate it. Real and hungry. Let us know what you want us to talk about next.
If you're real and hungry, subscribe, because we got more for you. We're real and hungry, and we want you to be real and hungry as well.